Welcome back to Fast Market. I'm Alex Coffey alongside Kevin Hinks. Kev, I think it's important for us to take a look at the market on mornings like today, where you have things jumping around. S&P's barely holding on to the unchanged line here, Kev, but they did take out Friday's low, but did bounce off that already by about a factor of 7 points. The NASDAQ continues to slide, made a new daily low, but the Russell and the Dow are hanging in there. What are we expecting here, Kev, or what are we focused on as we see this kind of market divergence continue to play out between the tech stocks and the small cap Russell?
Market opened up Thursday higher and didn't hold, Alex. Market opened up higher Friday and didn't hold. Market opened up higher this morning. NASDAQ did not hold. The others are hanging by a thread. This market is still choppy and not a clear path higher just yet, Alex.
And Kevin, this isn't entirely uncommon either for, as you mentioned, quad witching weeks. Weeks that we have important economic data like CPI. So when you're watching this, Kevin, is it really kind of now par for the course to expect this, at least for the near term?
Yes. It's that time of year. Everything is a little more dicey. Remember, we call non-farm payrolls and unemployment the #1 data point of the month. Why? Well, it's changed the tone of this market. That was a big miss, and now there's uncertainty, and you're seeing that play out. Stocks are only a couple percentage points off the highs, but S&P at its lows overnight was 100 points off its highs right near or after the unemployment number. So S&P's moved 100 points. That's not insignificant, Alex.
Yeah, no, it definitely is not. We're going to keep our eyes on that. Another part of the market that has certainly seen a tone shift over the past, let's say, 3 to 6 months has been the airline space, Kevin. That's going to be the primary focus here for our cash tag segment, as I'm joined here in studio by TD Ameritrade Network contributor Jenny Horn, and from LikeFolio.com, we have the co-founder Landon Swan with us as well. And so, Jenny, we're really going to focus in here on the airline sector as a whole, and then pulling out a couple of the names that we've done really for the last 20 months, and that's been Southwest and Delta. Not the variant of the virus, Delta Airlines, of course. But when you're looking at this, you just see these kind of tone shifts in the market, and they play out here in this particular sector.
Yeah, and it's actually extremely interesting the way that Southwest is up over 2% today. And it's what was objectively bad news last week. But Kevin and I actually talked about it on Midday Trade. Really, it seemed like it wasn't as bad as the street was expecting. So what's bad news for the airlines right now might be just better than what was anticipated. They said their September operating revenue they see down about 25 to 30% now, with October expected to be down 20 to 30%. So these numbers are not great, of course, but I think that getting any sort of clarity has helped investors sort of understand what's going on. And we're seeing this sort of slowdown in TSA travel when we saw a peak really in July with over 2 million passengers. But I have to say that in all fairness to these airlines, that it was the summer months. I mean, these are historically high times for travel. And I think it's important to keep in mind that now we're heading into a fall season, which is typically slower. So you would expect to see TSA checkpoint data slow down a little bit. So that might not even have to really do necessarily with the Delta variant. But of course, what is a concern is that we're seeing this slowdown in leisure travel. We're also seeing a pickup in cancellations. And really any sort of rebound that was expected with business travel has sort of stalled. So that is, of course, not good. But Southwest did highlight that travel demand for Labor Day was solid. But again, they did experience more than usual trip cancellations, and part of this was, though, due to Hurricane Ida. So I think it's really important to sort of break down this data when you look at it and say Hurricane Ida isn't necessarily COVID-related at all. So there's a lot of headwinds facing the airline industry, but a lot of it can be sort of, I think, separated from the pandemic. Now, one thing I really liked that actually the future CEO of Southwest said is that we're all hopeful that we have bottomed out in terms of the impact to the Delta variant. And he went on to say that although the exact sort of impact is still unknown in terms of revenue, they really think that this is less severe than the prior waves of COVID-19. And I think that's really optimistic because I think a lot of different reports have said that maybe Delta or COVID isn't necessarily going anywhere, but it's all about how these companies can sort of handle it and how travel in general can handle that. And that sort of is what our first tweeter today talked about, which I liked, which said, Delta, United, Southwest, and Spirit in squeeze mode. Many market participants have given up on this reopening trade. If COVID cases peaked at the end of last week, then the airlines could see significant inflows while COVID cases trend lower. And I would say that anyone that's giving up on the reopening trade is someone that's giving up on travel, which I would say you can absolutely not do, because I'm very optimistic on travel. But our next tweet sort of puts clarity into some of these numbers that a lot of airlines gave last week, which says some airlines are seeing better than expected July bookings, but are still providing lower guidance for third quarter. American Airlines says total revenue is down 24 to 28% versus 20% estimated earlier. Southwest Airlines says revenues down 18 to 20% versus 15 to 20% estimated. The pain continues. So again, these numbers, not great. You see double-digit % losses, Landon. That is obviously not a good sign for investors. But I do have to say that these numbers, I think, relatively speaking, don't seem that bad. And we've sort of talked now for what has been over a year about how Southwest has fared this pandemic better than its peers. So I'm curious if your data has any updates on that, or they're still sort of the winner in this space.
Well, so, Southwest has always been more about leisure travel, less about business. And leisure travel came back before business travel did. I think people were a little bit more, relaxed about that than businesses were. They're a little more cautious. And we've seen that actually leisure travel, the growth in that has started to slow down, whereas business travel has really started to pick up. It is the dominant factor right now. It's up about 42% year over year, where leisure travel is only up about 7% year over year. So what you can see the big bump in Southwest, a nice little run up there. But the concern is real across the board. I mean, we've got flight data mentions down about 20% versus 2019, which matches exactly with TSA checkpoint data. So it gives me confidence that our data is pretty accurate when it comes to airlines. I would say that Southwest is dropping the ball a little bit when it comes to happiness. So when we look at overall happiness, it's always been Delta and Southwest at the top, United and American kind of falling behind. But actually what we've seen is that Southwest has dropped a significant number of points, mostly due to cancellations and delays. American has dropped a ton, mostly due to cancellation and delays, but also added on by, I'm not sure what to call it, but flight attendants just not being polite to their customers and kind of being a little bit more rude, and being, very strict with all the masking and kicking people off planes, things like that. So American's really, really been crushed in this when it comes to happiness. Delta is the only one of the four that's just held on with happiness. They've done that by basically not screwing up, keeping things friendly, and actually taking a bit of the page from Southwest book when it comes to friendliness. We see all kinds of things on social media where they get little notes from their flight attendant. They get free wine on their anniversary. Just more smiles and just more pleasant trips, I think, is what's working for Delta. So of all of them right now, Delta looks to be the winner of the big four. But what's surprising is United kind of slipped into second place when it comes to happiness, which has always been a battle between Delta and Southwest has fallen off. United, again, just kind of didn't screw up, and they sort of held the line where they are. But this chart is wild to me because, you've got happiness as the y-axis, the up and down axis, and you can see that Southwest, ticker LUV, is in third place in that regard. American way, way behind. Unbelievably negative mentions on social media with American, and then Delta and United at the top. So what's interesting about this is, though, the negativity that's getting hit with for Southwest is mostly just cancellations and delays. And when it comes to that kind of negativity, that's generally short-lived. You fix that and people go back to liking the airline. But a company like American has not only the cancellation and delays, but there's so many people that are frustrated with the level of service and just the rudeness of the flight attendants and the workers. That may not go away. And Delta's on the other end of that. They're not canceling and delaying as many flights, but they're being super polite. So that's the kind of stuff that sticks around. So I'm very concerned with American moving forward, very bullish on Delta among the space. And then a little concern with Southwest, but I would expect things to pick back up once they get their cancellations and delays under control.
Landon, even in its best, most calm moments, trading the airline stocks is a head-scratching, counterintuitive experience, right? Jenny Horn and I witnessed it last Thursday when we covered the airlines on Midday Trade, and all this bad news came out across the board, and all of them rallied. Why? Well, because the bad news was pretty much expected, and a lot of the headline wasn't as bad as people thought. Uncertainty turned into certainty, and up these stocks went. A lot of them are at some pretty discounted levels from where they were. But this happiness thing, how important is that to a stock's price and investing? Because public service announcement to all our viewers. If you're going to be rude to a flight attendant or any service person, a flight attendant is a waitress in a bad restaurant at 30,000 feet. So you should make them angry at your own peril. I don't say a word when I'm on a plane to anybody. So what do you think, though, in terms of trading them is the most important factor? You've got Delta high. It's usually always high, right? United Airlines, kind of a surprising that it's higher than Southwest. How does this affect the trading of these names, though, Landon?
So what we've seen, we talk about purchase intent a lot, right? And that's a really short-term metric. That's revenue right now. Happiness, though, is a much longer-term effect because people want to continue to do business with companies that they like and that they enjoy doing business with. So happiness is a longer-term indicator. That's why I'm very concerned with American dropping down to 34. I think that's super low. Now, to your point, I do want to anecdotally talk about the difference. So I've flown on all these airlines, and I can tell you, if you get on a flight with Delta, they'll say something at the beginning of the flight like, hey, we hate masks too, but please put them on. It's the rule. Let's just, be polite. And then American gets on there and they'll say something like, if you don't wear your mask at all times, we'll kick you off the flight. It's like just a different tone. It's just, there's one's friendly and one's like, a teacher reprimanding a troubled kid. But anyway, the happiness, to answer your question, happiness is a long-term indicator. I think, though, with airlines, there's a little bit of a difference in that some of the happiness problems can be caused by these short-term things, cancellations and delays. If that's a long-term problem, that's a big problem. But I think with Southwest, they're notorious for being on time and not having cancellations, and they've had a really tough time figuring out COVID and all the changes. So I think that based on his history of our data and what we're seeing in social media, I think Southwest will rebound. So I'm not super bearish on them based on their happiness right now. If this level holds and United's outpacing them, then I am concerned. I'm very concerned with American. I think that's a very bearish number. 34%, even for an airline, is really bad. I mean, that's like Allegiant or Spirit bad. That is super, super low. It's not a big four airline. So they are missing. Delta, though, at 52, holding, again, that's, they're the best of the best right now. They kind of left Southwest in the dust. And I would say that's very bullish for them long term. People like to go with experiences that they're treated well and they enjoy the outcome. So bullish on Delta long term. Again, this is a long term thing, super bearish on American. And then watching Southwest, I really think they're going to bounce back if they can get this under control.
Yeah, I think that was well said and a great explanation, Landon. It sounds like we really got to just factor in, hey, there's a major difference between where Delta is on this map and where American is, and that's, unique. That means that there's an execution issue. There's something wrong where the person who's flying on your airplane is having a significantly worse experience on average. This is a lot of people talking about this. This isn't like, we took a straw poll of 10 people. So that's unique. And of course, as you mentioned, watching the trend shift in what Southwest has done, if that holds, could be alarming. But Landon, if we go back a month or two, when Southwest first kind of came out on this news, I said, hey, are you guys finding in your data, consumers actually talking with the same fear levels as the headlines make us think that is out there? And you said, we're really not seeing it. I'm looking at your data here, and I still see a trajectory for your 90-day moving average that's moving higher. Southwest comes out and they move their expectation from 15 to 20 to 18 to 20. To me, this almost confirms our first thought that this might just been a game theory play on Southwest's part, where they're just saying, hey, we have the narrative, why not lower the bar for our expectations a little bit? It's not going to impact our stock price that much, and then we can come out the heroes. Jenny made a great point, though, about leisure travel slowing down at this time of year when school starts back up, and we know corporate travel is tied to the pandemic. But when we're talking leisure travel, has it slowed down from what you can tell?
Yeah, it has. And so, well, the growth is slowing down. So now leisure travel is at plus 7% year over year. And of course, it's seasonal, but that year over year takes that out of it. So plus 7%, compare that to business travel at plus 42% year over year. Now, again, leisure travel picked up way earlier than corporate travel because families can make that individual decision, whereas a business is going to make a decision for hundreds of people. And usually businesses are more risk adverse. So families are going on these trips a year ago. And so by comparison, the growth year over year is much lower for leisure travel. Whereas, again, business travel is starting to pick up. You can actually see it in both charts, though. Delta and Southwest are getting a nice little pickup. So that is nice. But I do agree, there is a little bit of game theory, sandbagging going on here. And then when just like Kevin talks about, when the bad news finally does come out that everyone expected, you buy the bad news, which is very counterintuitive. And, this is a very frustrating industry to be invested in because it's just so strange. A lot of companies trade counterintuitive, but airlines are one of the most. And so I agree with Kevin there. And Alex, I think you make a great point about the sandbagging, if you want to call it that. But, just overall, I think you've got to look at who's going to execute. Is it cancellations and delays that are driving this down for Southwest? And so far it has been, and their history has been, if you book on Southwest, it's not going to be delayed. It's not going to be canceled. Now that narrative has completely shifted. And so now if you want something more reliable, you're thinking United, which is wild to me, but that's what the data shows. And that's where the people are moving. And then of course, if you want something that's always been reliable and always kept you happy, it's Delta.
Yeah, no, well said, Landon. We're coming up here on time. But another thing, too, is you talk about that corporate pace coming back. Delta, American, United trading at significant discounts to where they were before the pandemic. Southwest has certainly outperformed over this time frame. And so if you do start to see those trends shift, you could see those other big three airlines, the benefactors, at the expense relatively of Southwest. But we're out of time here. Thanks, as always, for joining us. Co-founder of LikeFolio.com, Landon Swan.